Hello, everybody. Welcome again to Milton's Market Minute. Today, I have a special treat for you. I've got George Adams from FNB, First National Bank. I'd love to shine a light on him and on this company for their amazing program of the doctor loan. George, welcome, and please tell everybody exactly what it is that you guys do, what's that special niche, and why it's the best deal out there for doctors and many other professionals that qualify.
Yeah, Milton, thanks for inviting me to participate, and thanks for asking about the physicians program. So honestly, what it is that I feel that gives us an advantage in the doctor loan space is we check all the boxes, right? Every lender or a lot of lenders out there have physicians loans, but typically they are limited in some way in qualifying the borrower, right? So, obviously most of them offer 100% financing. Well, our 100% financing goes up to $1.25 million, right? We can
That's
do
huge.
95% with no mortgage insurance up to $1.5 million, and 90% with no mortgage insurance for the borrower up to $2 million. We can also, and that's with a 720 score, we can go down to a 700 credit score and still do 100% financing up to $1 million or 90% up to $1.5 million. There's very few products that get that deep into the jumbo space with those lower down payments, right? And what it does is it allows people earlier in their careers that are great wage earners to buy more house sooner than they would be able to if they had to come up with a 20% down payment to get into a $2 million house.
Right, right. Which I think saves them money in the long run. Because I had this conversation with these two doctor clients of mine that you helped. Because they said, well, we could buy a less expensive, smaller home now and then move up because one of them maybe was going to play somewhere else. And we did the numbers when I said, well, yeah, we can do that. But then even if that property appreciates, you still have the cost of sale, the cost of financing, the cost of purchase, and the cost of financing again. I said, so you're going to end up actually losing money or not making as much money as you would have if you just bought the home that you love today. And the doctor loan program is it a tiered system, or how exactly does it differ from a normal loan? And what are the benefits that really are there for doctors that obviously their incomes do go up because we start them off really low and then they take off?
So that's a really broad question, right? And to add on to what you were saying about buying the starter home now and the big home later, right? Appreciation in the market is typically a value of a percentage of the actual value of the property, right? So 5% per year on a $500,000 house is a lot less than 5% per year on $1.5 million. So they're
Right.
losing all of that growth too that they would have got it. They just bought the big house first, right? And it protects them from inflation, increasing interest rates, all of those things that we don't ever expect or plan for that drive those prices up in a hurry, right? And the cost of the monthly payments as well,
Yeah.
right? So what's different about the doctor's loan is, again, lower down payments, right? No monthly mortgage insurance premium for the borrower, so that helps keep their monthly expense down. They get interest rate benefits for being physicians, and they also get incremental interest rate benefits if they do put down a down payment. So just because you qualify for 100% down payment, if you've got 10% to put down, for example, because you are selling a house, you had some equity, you want to roll it into the new house, that's going to take your already low interest rate down, typically another 1/4 percentage point. One of the other big advantages right now is, the expectation in the market right now with the Fed is that we're kind of at the peak of interest rates right now. And having been doing this for a little over 20 years, I can tell you these are the highest interest rates we've seen in the last over 15 years, right? So
Yeah,
the
for sure.
expectation is from here that rates will go down, right?
For the record,
Uh,
it is March 2024, just in case anybody listens to this in the future.
yeah, so the expectation as of today is that the interest rates will go down. Well, what that brings into play is some adjustable rate mortgages, right? And those aren't always the best idea for every borrower. You should always discuss the pros and cons and understand what you're doing. But our adjustable rate mortgages have fixed terms up front, and then they become adjustable for the latter portion of the loan. So those arms can go anywhere from 5/6, 7/6, 10/6, or 15/6 arms. The first number is the number of years that the loan's fixed for. The second number is how often after that fixed period expires the loan adjusts. So those would be fixed for 5 years, 7 years, 10 years, or 15 years, and then the rate would adjust after that every 6 months. Well, if
Okay.
we are at a point today where, March 21st, 2024, where rates are really at their peak, right? Just about everybody that takes a loan today at some point in the next 3 to 5 years is going to end up refinancing that loan to a lower interest rate, right?
Yeah. Yeah,
So
and
if
that's
we
part of the cycle of mortgages, right? That's the American model.
so if we believe that, right, a 7 or a 10 year arm, for example, would essentially perform for most people just like a 30-year fixed because they're never going to make it to the adjustable period of the loan. So in addition to 10% down payment being able to reduce their interest rate, we have those arm rates available, and the 7/6 arm, for example, is typically a half a percentage point lower than the 30-year fixed. So now if you put 10% down and you're willing to take a 7/6 arm, you've all of a sudden got an interest rate that's 3/4 of a point lower than typical
And
market, which
yeah.
makes the home more affordable on
Or
top
you
of
can
everything
buy
else.
more home, right? That's another
Correct.
thing. You can also buy more home.
You might be able to afford something you couldn't otherwise afford to let you stay in that home longer than the next 2 or 3 years, right?
So
Because we don't know what's coming.
what do you think makes why does your company so much more competitive than others?
So again, it's the number of boxes we check on the physician's loan, right? Like everybody does some of these things on the physician's loans, like the 50% DTIs, the ability to omit student loan debts for residents and fellows in accredited programs, um, the no mortgage insurance premium, the up to 100% financing. But we check all of those boxes, right, at the precipice really of what people are offering out there, right? Most of the lenders cap their 100% financing at $1 million. We go to 1.25, right? So we tend to be at the top end of each of those different categories on our physicians loans because those relationships with the physicians are important to the banks, right? They're
Yeah.
they're high
Well, if
wage
you're
earners as they mature in their careers. They typically accumulate a lot of wealth over their lifetime, and the reason the banks offer them the special financing is to get an opportunity to have that banking relationship long term with them.
they're some of the best clients out there, right? Like for all those reasons that you said, and just the sheer fact that they're doctors, you can already tell that they're quite responsible. And so I think that this program is a must for any doctor today. I've known a few that didn't take advantage of it, and I just couldn't wrap my head around why. Because this is an amazing program that really is catered, made for them, and doctors are in that special class of person and wage earner worker that is treated better because they're lower risk, right? They're much lower risk. And so I think this program is phenomenal. It's fantastic for them. Do your loan limits change depend upon state or city, or is it for the entire 50 states?
No, that's pretty much across the board, right? I mean, the bank has thresholds where they're comfortable and price points where they're comfortable, and then they've got spaces that's just not necessarily in their wheelhouse, right? So one of the things that I think keeps us aggressive in this space is as of today, we're somewhere around a $48 billion depository, right? And what I like to say is we are a big enough bank to matter, meaning we've got enough capital and liquidity to do all of the things that the big banks do, but
Hmm.
we're also small enough to still care. So each transaction and each decision we make is still important. And I can get to, decision makers as I need to on a loan by loan basis because they do value that transaction.
Okay, now let me ask you this. What about, because inventory is so low right now, a lot of people want to maybe build a home. Do you also do construction loans?
We do construction perm loans. We do conventional, we do jumbo construction perm loans, we do full-blown renovation loans. So if somebody wants to buy an existing house, completely gut it and renovate the whole thing, or they just want to redo the kitchens and the bathrooms. And then we also offer the construction perm on our physicians product. So, but to be clear, the construction perm on the physician's loan is capped at 84.99%. Okay. So you would need a 15.1% down payment. Um, but what it offers is the interest rate benefit associated with the physician's loan. So that rate is going to be substantially more attractive than the standard construction perm or jumbo construction perm, where with a standard construction perm within the conforming loan limits, we can offer financing up to 95%. But again, comes with typical market interest rates and monthly mortgage insurance premium.
That's a
With
kicker. Right? That's a big expense oftentimes.
the jumbo construction perm, again, also comes with typical market interest rates. That is available up to 90% loan to value. Okay, so higher than the physician's loan, but again, typical market interest rates and a monthly mortgage insurance premium. So if we do have an established physician that's able to put 15% down on a construction loan, I could actually run the numbers for them both ways. What it would look like is traditional financing and the benefit of doing as physician's loan, but their interest rate and the fact that there's no mortgage insurance premium would have a dramatic impact on how much house they could afford and what that monthly payment would look like.
It's hundreds, if not thousands of dollars different,
Depending on the
oftentimes.
price point.
Yeah, depending on the price point. Um, well, I want to talk a little bit about the experience that we had because I met you after my clients had already selected to work with another larger bank that was kind of known for their doctor loans. And what really just blew me away was that right before the holidays, they changed their terms on my client from one night to the next and said, oh, all of a sudden, we can't do the 95% loan to value that we had discussed. Actually, now we're going to need 10%. And they did it with 2 weeks before closing, right before Christmas and New Year's. And I was like, I couldn't believe that they would do that to them, because if you say you're going to do something, I like people who do it, right? You don't overpromise and underdeliver. And that larger bank, that large institutional bank, did that. And oftentimes, I don't like using large institutional banks because they always do that. But yeah, so it just drove me crazy. And so you came in at the bottom of the ninth, and not only were you able to do this loan for them at 95% loan to value, up to 1.5 million, but you did it quicker, you did it at a lower interest rate, and I looked up and down all over town, calling every single person that I knew, and nobody could do what you did. And so that's why I said, you know what, I got to get him on video, and I want the world to know, if you're a doctor, call us. We're going to get you the best deal, and I'm going to get you the best deal on a house. He's going to get you the best deal on that doctor mortgage and at the lower interest rate. So you really did save these two clients, and you saved their Christmas, you saved their New Year's, because they were freaking out. They really were. My job as a realtor is always to remain calm, but deep down inside, I was freaking out. I didn't think we were going to have enough time to pull it off, but we did. But we really did. And actually, hats off to you as well, because as oftentimes as we have right now, especially in this type market and with sellers who are a little bit unrealistic, but or like reaching for the stars in their values, you also did a very good job of defending us and really working with the appraiser to make sure that we got a fair value for the buyers. And so hats off to you on that, because you were really involved every step of the way. There's many times when I work with a lender and the guy that takes the application, you never hear from him again after application. And then you're getting an email from a random person in a different part of the country on a different time zone. Oh, we need a document on Friday at 5 p.m. Eastern, but she sends me the message on Pacific Standard Time, thinking as if like I have an ability to make that happen, and I don't. So I really do think that made a huge difference. Where exactly are your processors or underwriters? How do you guys work?
So the processors that I typically work with are housed out of actually the same location that my office was in if I were to go into the office every day.
Okay.
And again, same for them. Most of these folks anymore in these industries work remotely. They do spend some time in the office because it's nice to be around people going through the same things we're doing and having the same experiences, just to bounce ideas off of, really, and commiserate with from time to time. As we like to joke, it's cheaper than the therapy bills, right?
Right. Yes.
But we do, like I said, that it goes back to the big enough to matter but small enough to care, which in my career has been really important to me. I want to work somewhere where we're well funded enough to offer all of the products, like the physician's loan, the construction perm, the lot loans, all of the different portfolio products that we offer, right? Be competitive in that space. But I also need to be able to get to decision makers, because the worker bees don't always get it big picture, right? There's a lot of times they're working with between the guardrails, or they're trying to check a box on a checklist, and none of these transactions are one size fits all, right?
Never.
So we all have conversations with each other, and if we can't get anywhere, typically we'll get into conversations with our managers and work through those things. And the thing you said about the experience that the doctors we were working with had right before Christmas and they changed their guidelines, like, we're all human, right? Everybody misses things or makes a mistake, or something changes, but you've got to be able to make the business decisions to protect your reputation, your bank's reputation, those kinds of things, and still get the deal done at the end of the day, right?
Right.
We like to, again, March 21st, 2024, just to be clear, but we like to
Yeah.
all kid in this industry that there is no such thing as an easy deal right now. Um, there just aren't a lot of straightforward 20% down conventional deals where there's three other houses in the neighborhood that sold in the last 6 months at or above that value. There's a lot of moving pieces. There's the constant desire to have the highest sale in the neighborhood every time a new listing happens, right? There's the everybody pushing the envelope to qualify for as much house as they can, because what they used to be able to afford now they probably can't, right? Because of rising interest rates, increasing housing prices. So, there's all of these challenges in all of these transactions. And the only thing we can all really do is communicate with people and work together. That's what really, in my opinion, differentiates the pros in our industry. And by our industry, I mean real estate in general, whether it's me offering financing or you as the realtor, and the pretenders, right? The ones that are just here to collect a paycheck. And the reality is those folks aren't going to be of much help to anyone in this type of climate. And the reality is they're probably not going to last much longer.
Hallelujah. From your lips to God's ears, because we've been living through some historic times over the past couple of years, and we really do need the tantamount professionals, the ones that are at the top of their game, the ones that really take it seriously, to navigate these waters for clients, for buyers, or for sellers alike. And so that's why when I meet somebody, I've been doing real estate for 22 years here in South Florida, and when I meet somebody who is on the ball, right? Who really takes care of his clients, answers the phone, answers the email, really cares. Because at the end of the day, like, even if you can't do anything, even if you don't have any answers, but you pick up the phone and say, listen, I don't have an answer yet, but I'm still working on it. It's not avoiding the call, right? Don't ever avoid the call. Like, buying a home is typically the largest investment that a person is going to make in their entire adult life. And so if somebody in the chain is not giving it that level of importance, then I just don't have time for them. I don't. And they should leave the industry, because we're dealing with people. It's not just transactions, it's not just numbers, it's not just a commission check. We're dealing with human beings with their livelihood. And in this country of the God love this United States of America, home ownership is the key to being able to pull yourself up by your bootstraps and really make it in this country, because you can work hard here and you can really achieve anything. As I'm a son of immigrants, I know this to be true, but achieving it through home ownership is key for generational wealth into the future, for having a secure retirement, right? For making sure your kids can go to college. And so I think that we are serving a very important need in this country with our clients. So I really appreciate you doing a great job. Now, did I miss anything at all? Anything else you want to mention to clients out there about the doctor program, or how you differ from other companies? Anything at all?
I mean, there's just so much to cover on a topic like this, right? If you've got questions, or you've got a buyer that has questions, the best thing for them to do is have a conversation, right? And the reality is, 20 some odd years in the business, if it doesn't necessarily fit my box and it does somebody else's, I'm not afraid to refer them, right? Like, so that's not going to happen often, right? But there are a
Right.
few, there's a few times where maybe something is not in my wheelhouse, but there's somebody else out there that offers the product, and I'm not afraid to offer that information. Right? At the end of the day, we're here to help people. And the more people I can help on a day in and day out basis, year in and year out basis, the more effective I am at my job. Right. So that's what we're here for. I mean, there's a lot of, things out there. We allow you to start with a contract, right? So, for example, if you are a resident or a fellow today, right, and your residency or fellowship, whatever it happens to be, expires at June 30th of this year, and you're moving into your first full-time job July 1st, you've signed your contract, and now instead of the $72,000 a year, you're going to be making $300,000 a year. We'll use that income from the new contract and allow you to buy a house today. You don't have to wait until July 1st, right? There are some caveats that come with that. As long as it's within 90 days, it's typically pretty easy. If you go outside of that, that's fine too, but you have to have assets available to cover the number of months between you starting the job at the new wage
Right.
and closing on the
But
house, right?
think about how much more convenient that is if you're a new doctor that is now moving to another city to start that job. Being able to get that home purchase out of the way and get yourself moved in before you start your job is just like quality of life, honestly. I
For
think
sure.
doctors
And
have enough stress that that's definitely a huge plus.
And we'll allow, in that scenario, right? We'll even allow them to buy prior to having their licensing in the new state, as long as they can show that they've applied for it and we have a letter of good standing from the state that they're currently licensed in. So there's just an infinite amount of flexibility with this program. In a half an hour, there's no way to cover it all, nor would we be able to do it without putting people to sleep realistically.
Right, right,
Um,
yeah, yeah.
it's a lot of granular detail there, but it's just about having the conversations with people, asking the questions, really truly listening to their answers about what they want in their situation. And at the end of the day, that was the challenge with the other lender, right? They weren't paying
Mhm.
attention to the residency status, and they missed that they were here on a visa as opposed to being citizens. And that's what kind of changed the game for them. So you've got to
And
ask
down
all
here
the
in South
questions and
Florida,
listen
that's
to
a
the
big thing
users.
because we have a lot of doctors that come here from overseas that match here, right? Or they finish up school and then they start their program. And so yeah, that's a very big thing here in Miami. Well, I'm gonna have all your contact information below so people can definitely reach out to you directly. And to all my doctor friends out there, now is the time to get the information you need so that we can plan moving forward to buy your dream home. This guy's got the program for it.
I
All right,
appreciate
George,
that.
thanks so much for joining me today and helping me, sound the bells and bring this to everybody's attention. I'm going to make sure that we get this up on the YouTube channel and push it out there to as many doctors as possible that don't know that this program exists. That it really is the best option for them to get into their dream home. So thanks so much, George.
Thank you for having me. Appreciate it.
My pleasure. Take care.
Yep. Have a good one.